Good morning, traders. I hope you all survived the FOMC yesterday and the rest of the Bank of Japan. If ever you are in a little bit of problems with your trading psychology, the analysis, some of the fundamentals, just know that we are still, as a team, providing our coaching sessions. You can also have like a bit of a discount if you take your first hour or more hours. So just know that we're still available. Program is going relatively strong, but I still have, after the next few weeks where I'll be less online, I still have a few slots open. If any one of you would be interested, please be welcome. Also note that today there's going to be that presentation by the Gilbert Group. It's unfortunately not open to non-US participants, but if you have the time to listen to F.A.C.E today, after we will have done our little half hour going through the markets, the Gilbert people will be online and explain everything that they do with their promotion that they will be running right now. So make sure to tune into F.A.C.E later on as well, when they will present their setup and the competition that you can actually join as well. Right, moving over to what has happened. First of all, a few headlines other than real data or central bank meetings. Kanda, the ex-head of the FX department in Japan, has been named Special Financial Trends Advisor to Kishida and the Hayashi cabinet, so he's not going to be far away. He will be advising Kishida as well on everything that goes on in FX. As we know, Bank of Japan is very much close to all governments, institutions as well, and Canada was never far from the market, so he is going to continue to keep an eye on the markets, I would say. Elsewhere in China, and I'm straight away going to get to what we had here as well. We had the manufacturing PMI coming out in China. We dipped below 50. In the meantime, we still had officials saying that they would manage to get to their growth goals, etc., do everything that they can in their power to get this economy rolling again. But after that drop in the dollar China that we saw, likely in sympathy with what was happening in the yen as well, we are now gradually losing steam again. The bond market, by the way, is still pretty big in China, and I've seen that the bond prices are still running pretty hot over there. So still a bit too early probably for the investors to start to really believe in the China revival. Elsewhere, we do have OPEC meeting today, but it's just been postponed. So I'll have a quick look at what's happening in oil. I know I talked about that yesterday, but since we had so much else to talk about, I completely forgot about it. But I will have a look at the oils today because it's really interesting, this bounce and what's going on in the oil markets right now, linked to not only Middle East, but I also think the global yield environment coming down is underpinning stuff like oil, for instance. So that for the OPEC, there wasn't really much world shocking. Just a little update on how the U.S. election race goes. It does look like Kamala Harris is making the Trump party a bit nervous because she's really catching up with him. The polls are getting more and more favorable for her, at least to catch up on what Trump is doing. So we're seeing perhaps a little bit of a give back of this Trump versus version 2.0 trades. And as we've seen in the what we've seen before, like for instance, the rotation from tech and others into the Russell, into the Dow, seemingly has come to a little bit of a standstill. And partial reversal, because yesterday, the day before, we saw the tech market, yesterday especially, the tech market S&P grabbing back quite a lot with the Russell and the Dow very much underperforming versus those two. So whether it's falls not, it's still far too early, but it does impact markets, right? So we have to think about what it may do to markets, and that is partially the explanation of we are seeing this inverse little rotation that we've seen in those U.S. equity markets. I think at least that is part of it. Right. Unless there's been any other headlines that you guys would want to talk about, non-data, non-central banks, give me a shout. But I haven't seen many other headlines that really would impact markets which are not really direct market related. But please feel free. Yeah, but that we talked about that already, Bran, right? We talked about it yesterday about the Iran situation. It's still ongoing. The Hamas said that they have no other choice than to defend themselves. And I mean, this story is probably going to continue. By the way, I mean, it's actually pretty good that you brought it up, because we're seeing some setback now in stuff like gold today, and I will have a look at it today too. But I think we have met a couple of reasonable intermediate targets. This being said, tomorrow, of course, being a very big day for the U.S. jobs market. This being said, in general terms, I would suspect that people will not want to run too many short gold positions or short at all going into the weekend, because we never know what can happen on the geopolitical side. There's been a little stress as well in the south, in the Taiwan Strait, because Canada found it useful to send one of its ships through the strait, just to prove a point that it's a free waterway, and of course China is not happy about that either. Right. Let's get to what happened before diving into the FOMC. What happened on the rest of the data? We saw that was already talked about on F.A.C.E. We saw a little bit of a tick up in the Canadian GDP here. Dollar-CAD dived under 138, but in the meantime, since it's a May number, since it's also this month-to-month preliminary GDP wasn't really a big success there. It stabilizes now back well above 138 on the dollar-CAD. We did have the employment indices coming down just a tad. In combination with what the FOMC did, that may be partially why the dollar was under some pressure yesterday, because we know that Powell and the Fed are looking at this ECI. But the move itself is not really big. Okay, so I will we will have to look at the combination tomorrow as well with the rest of the employment data. Okay. Chicago PMI, bit better than expected, but worse than the prior. No move at all. People were waiting for the FOMC. Crude inventories in line with what the API showed us. It did help the oil to remain underpinned as well, as I already mentioned, together with lower yields elsewhere, with the geopolitical situation as well, and also perhaps even though those amounts are not really of the sort of influencing a market as such, but the SPR people are regularly filling up the tanks again, but that was only to the tenor of, I think, 5.5 million barrels or so. It's not even a day's consumption, right? Next, we had the Aussie manufacturing PMI out overnight as well, hanging around the prior levels. We had the trade data out of Australia as well. A bit of divergence between import and export prices. You know that they are not really running at the same speed. Yeah, the import prices are not necessarily showing the same moves the same month as export prices. But export prices diving is perhaps not the greatest thing for Australia, but the trade balance was relatively okay. All right, trade balance was relatively okay. Moving on, we also had the rest of the PMIs this morning. Small mention here, and I need to mention it because Norwegian krona has been already strengthening over the past sessions. It printed a pretty decent one, well above the 50 level again. So Norwegian krona is keeping its bit tone this morning, yeah, especially on some of the cross sites like Euro Norway, for instance, is still quite offered, right? So that's a special mention. The rest of the PMIs, Eurozone, very mixed. Let's say mixed. Spain still remaining above the 50 mark, but lower. Italy well below 50, bit higher than the prior. Sluggish French PMI. Germany a beat for once, but still lower than the prior one. And then we had the pan-European index around last month's number, still well below 50, okay? We also had a bit of employment rates out in Euroland. Italy ticking up just slightly, 0.2 higher with the revision included. And the Eurozone employment also ticking up 0.1% there. We also saw yesterday that the German unemployment is ticking up, not the unemployment rate, but the overall numbers of the unemployment were ticking up. So that is a bit of a logic move here, I would say. And then we had I must say, regular outperformance now. We know that services are more important, okay? But let's give a little cheer for what's happening in the UK here ahead of the Bank of England. It printed 52, which is, let's say, relatively good, relatively well, and in expansion territory, okay? So just taking the face and the headlines on the face value of it, UK is still doing pretty well versus the rest of Europe, okay? Right. Shall we dive in straight away to the FOMC? Let me pull up a few things here, and you know, we are going to look probably at the dollar yen, because if you want to look at euro dollar yesterday over the numbers, if you look at these, let's go on a really short-term time frame. We had nothing better than no, it's here actually. We had nothing better than 30 pip move right on the FOMC. Euro dollar is really barring this morning, and I will come to that. Euro dollar is really not your favorite instrument somewhere to trade whatever happens on major data. Well, while we are on here, I think it's been clear for a number of days that the euro has had difficulties to keep the rallies. As we can see from mid-July, we are regularly printing lower highs, lower lows, lower high, lower low, lower high again, and to this morning we printed a lower high. It's been a theme, and I'm still not a fan of euro. By now you should know that. For those who are regularly listening to our shows, I still think the Eurozone is an underperformer for one. For two, if you look at the global yield sphere, where you have good reasons for the yen to strengthen after the Bank of Japan, for instance, because the yen, especially on the short end, interest rates are pulling a bit higher, where the rest of the yield environment is coming down. There's a good reason for the yen to strengthen, to find the yen in yen terms, bits on dips, okay? So there's a good reason for that. But the euro rates, and if you look at it, we had like a small blip higher here, but the euro and the dollar rates, if you look at it over the past 2 weeks, it's still in favor of the dollar. So the European yields, barring this blip yesterday after the FOMC, okay, in general, over the past 2 weeks, the euro rates are actually coming down faster than the US yields. So, and that is something that we need to take into account. You know that I always like to look at those differentials, and I'm not going to say like don't look any further, but overlay euro dollar with those shorter term interest rate differentials, you are going to find that they more often than not run in the same direction. Okay, so if I were you, I would keep at least a distant eye on what's happening on the euro differentials. Okay. So we had this blip yesterday, this morning coming down a bit. I think it's the case that there is not a lot of strength in the euro. Whenever euro crosses go higher, it's likely a problem of either risk off and that the other currency is not doing well, or when most of the time when it really there's not a lot happening, and especially now in euro dollar as well, euro dollar tends to be a little bit weaker. But are we going to break fresh ground? I'm not sure yet. So let's get over to the dollar yen and get over to a shorter time period. FOMC. Okay, where are we? We are here. Okay. The FOMC came out, and so we had two legs in there, and we have seen exactly the same as we saw on the Bank of Japan on the other side around. Okay, so the statement was relatively neutral, like telling us that they weren't going to cut the rates this time. There were a little differences in the text. Yes, not that inflation was not such a threat anymore. And then Powell came on, and that is exactly what I expected. Combination of the both statement and Powell is that Powell threw the door wide open to a September cut, and he has been really repeating it quite a lot. So overall, I'd say it's been a relatively dovish meeting, but also should not, and that's what I said also before, it should not have been a major surprise that he threw the door open for September, because that is exactly what he's been doing since already a couple of months, that saying that we're not there yet, so we didn't vote for a cut today, but we are getting there. And then he also repeatedly spoke about the dual mandate, looking at how the job market is going. And as I said already a couple of times over the shows, it's not going to take a big miss on any of the job report coming up to get a cut in September. Now, it's going to take a bigger miss to get a bigger cut. Okay, so for the time being, I think what he's hinting at, and he was asked like the cut question a dozen times yesterday, but he then admitted that they actually spoke about a cut yesterday, but the way that he talked about it, he was not one that would have voted for a cut yesterday. Okay, but now it leaves the market guessing whether we will have 2 cuts this month, this year, sorry, or actually 3. And if we look at the rates market, the pendulum is swinging again. We are now actually pricing very close to 2.5, 3. Let me quickly look where the Fed funds are for the end of the year. We're pricing about 2.5 cuts. Okay, so we're somewhere in the middle of those cuts. So the reaction that we had, and let me go even shorter term. So we had this. Where am I? Here. Okay, yeah. We had this reaction here on the initial release. Actually, dollar yen went up a little bit because it was looking a little uncertain about what they were planning, or Powell was going to say. But then quickly, as soon as Powell started to talk, we saw this move down, okay? And that is, I think, combination of the Bank of Japan and the FOMC. That is actually a relatively logic move because Powell threw the door open so widely, okay? And that to talk about a typical move. So this is the BOJ and the FOMC combination move, and I want to show straight away another one. And I'm also going to go on to the shorter term frame. This is what we saw yesterday after the FOMC, and when Powell was talking, dollar Swiss also started to collapse. Now, why is this kind of important? And we could overlay the gold as well, for instance, is that we are in a situation we are in a situation where the low yielders are taking revenge. It started with the yen already a while ago. The Swiss also followed suit already. But then yesterday we had again an acceleration on things like the Swiss. We had an acceleration on things like the yen. And this is important now because this is how the market is trading right now, is that you see global yields global yields elsewhere, especially in the majors, coming down. But the low yielders are staying relatively stable, so that the interest rate differentials, it's more an interest rate differentials play than flight to safety this time, Brand, because a flight to safety would weigh on the stock markets quite a bit higher. But it's okay. European stock markets are lower, but it's not really a big washout of risk right now. Okay, this is really the revenge of the low yielders, and just to show the people how this works, it's interesting to show stuff like the dollar Swiss, the dollar yen, and then also if you look at what happened yesterday in gold on the back of the meeting, this is the move in that we saw in gold, okay, after the FOMC. So everything that has no interest or low interest rates, when the differentials reduce pretty severely, I would say, because if you look at the 2 years, for instance, and the 5 years, US yields yesterday, they really took a big slap, right? We are now, this is as a whole, we are now pricing well over 4 cuts in this exercise, that in the 2 years, closing in again on the 5 cuts mark. All right. So when those yields are coming off sharply elsewhere, the low yielders take revenge, and it's still ongoing this morning. If you look at stuff like the Swiss, for instance, we are still slipping down. Right. So coming back to the FOMC, the door is wide open. Now we are back to data watching, and tomorrow, and that's what I said. Tomorrow could even be a much bigger mover. I think the jobs report tomorrow has the potential, if it comes out really crap, to have the market pricing in even a 50 BP. Okay, so we have to be a little. I don't think it's going to be per se warranted, but the chances are there that the market is going to try to price in a 50 BP for September. So watch out for those data tomorrow. I'll come back on it tomorrow, of course, but I would be a bit careful with those data tomorrow, and we can't warn early enough. It's going to be a very, very big report tomorrow. On the other side, an as expected report is probably not going to price out rate cuts unless employment rate dives back under the 4%. If the unemployment rate dives back under the 4%, talking about that second part of the Fed's mandate, that may have people reflect on what's going to happen in September. Okay, I do think that barring shocks, September will be a done thing, but watch the bond market because it's going to be volatile tomorrow. That's what I think. Okay, that's really what I think. And if we get a report sort of in line even with the employment not changing too much, then I still think September is on the cards, because telling us the fact that they spoke about it yesterday already, I think they are really ready to do something. And he also said, interestingly, and that's a very interesting line, that he wants the music to continue to play. So they are ready to support where needed, and ready to support the economy, and that's where the equity markets really came in, and they really liked what he was saying yesterday, and we saw this the S&P rally quite a bit. We are here. Yeah, we are here, and we saw the S&P falling back up quite a bit. So I think somewhere giving us September, so to speak, is putting risk on the better footing, because of that line where we said we are ready to support things. Okay, so that's my take on the FOMC. More than happy for you guys to comment. Look at where we are on the S&P right now. Is my line correct? Yeah, we are closing in on the I have it around 55.80, which is also around the prior top, which is also around an interesting little zone here. So we are gradually moving up there. Okay, we're trading 55.40 right now. And I would not be surprised before the day is over that we test the line. Are we going to hold it there? I'm not, or break significantly? I'm not overly sure. But what is clear is that the line yesterday, with Powell's line yesterday, should find support on dips. And I would think about any move back down to 5,500 here is going to find buyers on the S&P right now, okay? Unless we get like a shocker of a report somewhere, a surprise somewhere today, which I don't think is really on the cards. Okay, so that for the FOMC. Now let's get back to this euro dollar, because we saw a little bit of a break here below this 107.95. So we are in a bit of this descending channel here. Some people will call this, I don't know, a flag pennant. I never know those names, and it's not really important. But I do think what's important here is that the euro doesn't have too much strength of its own. So looking forward to what's happening then tomorrow as well. I think there's a risk on a good report that we see a breakdown on the euro dollar. But again, more on that later. Yeah, thanks, Gavin. Yeah, those as well. I mean, we've seen pretty big rebounds in Nvidia and stuff, right? And Gavin is saying that we have Amazon and Apple and Intel results after the close tonight as well, and we've seen that the markets like to trade pretty heavily after the close. Okay, so let's get back to our yen a little bit here, and I had a bit of a, how shall I say, rant? Not really a rant, but I'm pretty disappointed because I left my bid just a peep too low here on this dollar yen. I thought there was a chance. I know the 61.8 was there, but I was looking at, especially at this trend line here, which came in just below 148.5. I had a bid in at 148.5, and I missed it for literally less than a pip. So, and I know that Michael in our room has had the pretty similar experience, and that is a okay, an expression of frustration. Better words, Kevin. But anyway, I think it is important here. We saw the bounce. We saw the bounce back up to 150. I don't have the line at 150, but it's pretty clear that 150 is a bit of psychological level here, right? So it's around there. But to me, the more important one is back here, this 50% of the 2024 rally at 151. Because yesterday, Just after the FOMC statement, we had a little peak above. I think some really short-term stops got triggered there, above 151. And then after the FOMC, we started to dive again and look at the time. The timing of the lows that we did is also pretty important. It's around Tokyo fixing time. Okay, so I think there's been quite a big dollar seller, yen buyer fixing in Tokyo fixing time, and that is when we printed the absolute low. Going forward is going to be an important level, yeah, 148.5. So for tomorrow, already front running the events a little bit. Let me just quickly look back on those on the calendar. What do we have this afternoon on the US calendar? We have the Challenger job cuts and initial jobless claims. Well, yeah, Powell spoke about those jobless claims as well. He said that they are seemingly rebalancing, but he wasn't really too annoyed by those yet. So I'm not sure whether those initial claims will have a lot of impact. For sure, not a lasting impact because everything's going to be about tomorrow. But yeah, for the dollar yen, I'd say 151, then 152, and mega level here 148.5. Okay, this is a big level now again. Read quite a few people talking about the yen. Now everybody's talking about a move back down to 140, or most of them at least. Only very few think that this is a temporary move and that we are gradually going to stabilize again. I think tomorrow will give us a very big message for that to happen and what may happen. Okay, I think tomorrow is going to be the message for us to see if we can retest and break, perhaps, or if we're going to start to stabilize and perhaps gradually go up again. Now, when we talk about the dollar yen, we have to talk about yen crosses as well, and one that is in line with that euro dollar, still not feeling too well is euro yen, and I think if we see relatively bad numbers and the dollar yen dumps, I've also got the impression that even if the euro dollar would jump a bit higher again, because it's US data that are going to be the driver, this one is still not looking too fresh. So any worse numbers, I think euro yen has really the potential to at least go for a decent test of 160, which is around the lows here of March. But why not even go down to into the 150s, 157, 158. So the next round, if you would see next round of bad numbers, would it be in the States or elsewhere? I think euro yen may be participating in the party. If of course the dollar yen turns around massively tomorrow, this is likely going to stabilize, perhaps move back up even to closer to 162.5, perhaps even 164, which is the 50% of this year. But this is one that I would keep an eye on in case we get more bad data, because this is likely going to participate. Voila. And then another one that is not looking fresh at all is this Euro Swiss, okay, and also in line with the revenge of the low yielders. You know, we were talking about this 95 3/4, 90, 96, 96 10 level, and we tried to get back up there, but it really dropped below quite severely. Yesterday, I tried to catch a knife around here, around this trend line, which was around 25 then. That was around fixing time, by the way, yesterday. So yeah, tried it, but gave up really quickly when we went below the 95 10-15 zone, the 61.8. Okay, and now we are on the next support here, 94.5. But unless we get some really positive news somewhere, we may be in for 94, the figure somewhere. Now, is it fundamentally justified? I don't think so. But sometimes the market is doing stuff. So I still think it is part of this get me out of everything low yielder stuff. I'm not going to buy it, but I may, and that's what I want to come to now. Even though the Swiss has been very big, and now this brings me to the Bank of England. I may, if we get a bid somewhere on the sterling, I may start to be tempted in sterling Swiss. I know it's broken down here, but sometimes, and I know also we are now below the 200-day moving average, but depending on what the BOE does, we could easily be above there again. If the market is done getting out of Swiss franc, because I think this is mainly that move. The market is done getting out of Swiss franc, and so I need the two to come to fruition. And if the Bank of England goes like holds the rate still, or does even a very dovish hike, and we see a bit of a move lower initially, I may start to get interested, and then watch what's happening around the 200-day moving average. Watch what's happening around 111.5. Okay, we could dive below on a cut initially, because the market is trying now to price a cut for the Bank of England, and that's why sterling is under the cosh this morning, because we had a lot of concentration and a lot of focus on everything that was happening in yen, in the dollar yesterday, and what the asset managers, the real money, or the big players, they were focused on dollar and yen. But I think today the focus is now on the sterling. Sterling has been under the cosh ahead of the Bank of England, which the market thinks they are going to be dovish. Okay, I would say it's a very fine line today, and we've been discussing that in our room quite a lot in the Flowonomics room, whether it is important that they cut now or that they cut in August. So the consensus is it's not so important when they cut, but it's important that they cut and how they bring it over. So for me today, whatever's going to happen, it's going to be a 5-4 decision somewhere. And then my base case is, either we get the choices, either we get a hawkish cut or a dovish hike, or a dovish hold, okay? If they hold it today, they will probably open the door for wide open for September, similar as what we have seen on the FOMC. If they cut today, it's probably just going to be a sympathy cut or so for the economy, not just to, a bit like what Powell said yesterday, just to keep the economy going. Because if we look at some data like inflation or so, it may be okay to do a cut. If we look at how the GDP behaved, it should not warrant the cut. But since there were so many, or a good few, I should say, of the Bank of England members of the committee on the limit of voting for a cut last time, I think it's a fair chance that they get over the line now and produce a cut. So we will hear as well from Bailey afterwards. Be careful, because traditionally when Bailey talks, the sterling tanks. But I have to say that the last two interventions that he did, sterling didn't really drop too much. Quickly moving over to the cable. And just, Patrick, do you feel that the Swiss is flight to safety? Well, again, I think compare it with, it's following the yen to a certain extent. And what I think is that people got out of everything yen, and then they likely were thinking, okay, if we can't sell yen for now. Perhaps we jump onto the second low yielder, which is the Swiss franc, okay? And they got a little bit burned on the Swiss trade. And so flight to safety in parts, yes. Following gold in parts, yes. But it's more like I've got the feeling it's more like a get me out of everything move right now, and I want to see what's happening afterwards. And it's also, as I said, a move when the whole developed market yields environment comes down, and it all came down, as I showed, all of them together, whether it be the euro, the dollar, the sterling, just to name those three, all yields are coming down. The yield differentials comes down, so the correlation says that the low yielders are gaining some traction, okay? For it to be a completely risk-off trade, so as a flight to safety, we should have equity markets also coming down. Now, it's been a bit of a mixed bag, but if you look at the main equity markets, we're back higher, right? If you look at the US, the S&P, the techs and stuff. So it's not your clear-cut risk-off flight to safety trade, but there's obviously a lot happening. Cable, we are on a level here, 127.60. This is the 38.2 of the last run higher. We're on a level here and on the trend line support. Okay, so this is going to be the choice for the sterling in 3/4 of an hour. Whether we rebound or whether if they cut, I think that at least we are going to have perhaps a sympathy visit down to 127, maybe 126.70 or so around here. I think that's all within the possibilities to get a move down here if they cut. Now, is it going to hold lower? That will depend on how they bring it over. I'm really going into this meeting with a very open mind because I just want to see what the market reaction is, because we have seen so many outsized or nervous or violent reactions on everything that happens now. I think the market is probably traveling relatively lighter in positions, and liquidity may not be great. So reckon with some decent moves. And it is possible that if they cut, we are going to have a move down into the 126s. Cable is not going to be my favorite instrument, okay? Because tomorrow we have that NFP, and I'm really a bit cautious with all things dollars right now. Now, if they hold, I wouldn't be surprised if we get all the way back down up to 128 and a half, at least up to 128, 128 and a quarter, 128 and a half, because a hold would place them back at the same level. They would hold the rates at 5 1/4, would place them back at the same level of the FOMC. And then you look at all the rest, and does the sterling need to weaken more than the dollar? And does the sterling need to weaken versus other stuff? Is then the question that we will have to ask ourselves. And I would say that if they hold, even if they virtually announce September, based on what the data are telling us right now, I'm not sure that the sterling is really a favorite sell of mine. Okay, so not right now. So if they hold, I wouldn't be surprised to see a bit of a lift again. And I'm going to go back to this very simple one. You know, we closed the month virtually around 84.5, where this 200 monthly moving average comes in. So, and yesterday and the day before, I told you, okay, I mean, if we close above, below, it's going to be very important. Now, I think we need to take today in the lot, right? So I still think that is going to be important where we close today, above or below 84.5, let's call it, okay? If the Bank of England doesn't cut, I'm thinking that we can go for a look lower again on the euro sterling. Also, looking at how the euro as such is behaving right now, I do think that we are in, if they don't do anything, okay, I think we are there's a fair chance that we break back below 84.20, 84.10, and we are going to have a look at those lows. This is actually, if they don't cut and they give us something less than outright dovish, okay, I think we can have a test lower again on the euro sterling. All right, this is actually my preferred trade in case it's warranted that we buy sterling this afternoon. All right, and yes, Brandon, as you say, the emotional sterling, the sterling tends to get quite emotional at times. Kevin, this cut, when it does happen, seems to be so well telegraphed now. I wonder how much it does affect sterling now going forward. Yeah, I mean, yes, it could be a relatively stable move. No, it's not going to be stable because tomorrow we still have a big US job report which will affect everything. But if you look for some stability, you look at the balance between hawkish and dovish today. And then I think we'll decide upon quite a move in the sterling. Will it move? I think so. I think it will move. Okay. Because just the market is I don't think the market is very highly positioned or strongly positioned right now, because we see all of those moves where people get in and out of positions. I think we're relatively, I would call it relatively balanced right now. So that is my view. It will move. So I told you to have a quick look at oil and gold. Okay. So I was long and I let the rest of my gold go overnight. Was pretty lucky that they overshot this level just here. So I'm flat right now, and I'm waiting for a bit of correction. And I'm probably going to wait. Yeah, Joao. Yeah, I forgot about that one actually. Is it ISM today as well? Ah, the ISM manufacturing, yeah. Oh, I forgot about that one. Yes, it's okay. Sorry about that. Yeah, this could actually move, and I would look headline number, and then everybody looks at prices because of inflation, of course, but pay special attention because we are in employment week to the employment index this afternoon. That's what I would say on the ISM. Sorry about that. I completely forgot that this was happening. I was a bit too busy on the Bank of England and post FOMC. Thanks, Joao. So gold. These, as I said in the room this morning, looked a little bit like too much of a fragile channel, too short term. We are correcting now. So into tomorrow, I still think the market won't want to be short gold going into the weekend, but into tomorrow, I would not be surprised. Okay, I would not be surprised if we correct just a little bit more to come back down to those lower levels here. All right. So watch again 24.55. If it breaks, then we're probably going to have a visit up to the highs. Actually, it's a good reminder, Joao, because ISM, yes, ISM can actually be a mover. So imagine that we get an absolute disaster report. Gold will probably get that bid again, even before the NFPs tomorrow. So, but in the meantime, okay, correction, and I think I wouldn't rule it out to just come back into the middle of this thing. I don't think gold is going to drop back down below 2,400 straight away, but some form of correction, I wouldn't rule it out. And then lastly, oil. Okay, people were watching this. I think I must have missed this one. Yeah, it's probably this one here. People were looking at. Yeah, okay. So yes, hopla. Whoops. So we held around supports here on the gold, and now we are moving back higher. I would say keep an eye on this thing if we reach 80. We have the OPEC meeting today, so not expecting them to move straight away because that's not what they were really thinking about. But keep an eye on $80, which is in the middle of the road. It could stop there and then stabilize. unless geopoliticals really deteriorate, unless yields continue to really dump lower, perhaps we stabilize a little bit around 80. That would be my view. All right, just if you overshoot around here, 80, 80, 20, somewhere around here, I could see it stabilize for those who, and I know some bought the dip in our room. Yeah, this is a level where you should perhaps, if you're long, take a few off and then reflect on what's happening or monitor what's happening. And with that, guys, I hope I have prepared you for the Bank of England. Let's call this a show, and we talk again tomorrow. Michael, why would you not want to be long? No, I said I don't think that people will not want to be short gold into the weekend. Did I misspoke? I don't think that people won't want to be short gold into the weekend, but I wouldn't rule out a bit of correction, bit of corrective activity. All right. Okay, thanks guys, and we speak again tomorrow.